Welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm Frank Holland, in today for Mr. Bob Pisani. And this week brings a somewhat merciful end to the first half of 2020. For ETFs, some clear trends have emerged. The winner for inflows, that continues to be the bond market as the Fed buys up treasuries, corporate bonds and ETFs, as well as muni bonds. Most of the money in equities is going to those top plain vanilla index funds, with Vanguard's ETF suite capturing almost 40% of all inflows. And joining me today to unpack all of this, Brian Lake, head of America's ETF distribution at JP Morgan Asset Management, and Todd Rosenbluth, Senior Director of ETF and Mutual Fund Research at CFRA. Todd, we're going to kick things off with you. What's in store for the second half of 2020 if we have you look into your crystal ball?
Well, first off, let's just recap. Over $200 billion, billion with a B, has flown into ETFs, despite the fact that we emerged into a bear market and despite the fact that the volatility has picked up significantly. Investors rotated towards fixed income ETFs that you mentioned, like LQD and HYG, getting corporate exposure. They moved into gold products like GLD. And where we did see money going into international ETFs were some of these lower cost products. JP Morgan has some of them. We think we're going to see continued growth. We could actually get closer to a record year in 2020 for ETF flows. If people who found ETFs during the market volatility continue to embrace them, retail and institutional investors, we think we're going to challenge the record year of a couple of years ago.
All right, turning out to Brian, I believe we have you on now. Brian, thanks for joining us. So you've said in the past that it's time to buy high quality. What do you mean by that? Kind of break it down for us.
Yeah, well, Bob, thanks for having us. And it's certainly a pleasure to be here. So when we're thinking high quality, we're thinking about how are investors adapting their portfolios for what is the reality of an unprecedented time. Certainly, there's a lot of unanswered questions, and investors are thinking about what do they need to be doing in their portfolios. And so we know that we need to stay invested in equities. We've certainly seen a huge rally off the bottom. But how do we do that in a way that's thoughtful and articulates the view that we want to take on markets? And so quality is a great way to do that. It helps you identify the strongest balance sheets of companies that are going to benefit and hopefully come out of this as winners in the long run. Oftentimes, investors will look at dividends for that, but with all the dividend announcements that we're seeing come through, we think that that space is going to be challenged. And so when you can use an ETF like JQUA from JP Morgan to help you identify the 100 strongest balance sheets that go across both tech, energy, and other areas, that certainly helps you to tilt your portfolios towards some of those names that could benefit in the long run.